All right, what's up, guys? I hope you're doing well. James here from jamesdforsythe.com. And so a few days ago, I went over a speech by Governor Jay Waller again, or Christopher J. Waller, right? But it's basically about CBDCs, right? So central bank digital currencies, and pretty much about how apparently I've been wrong or could be wrong, because I was actually quite surprised on his opinion of it. So through that speech, I was able to find a previous one that he gave August 5th of last year. So August 5th, 2021. And basically it's titled CBDC, a solution in search of a problem, right? And just like the other one, we're trying this new kind of format, right? To where basically instead of having me screen share it of the speech itself, because there's no graphs or anything, I'm basically I'll link everything so you can follow along if you want and that sort of thing. But otherwise it's just kind of the talking part of it. So with that being said, this one I thoroughly enjoyed reading, just because basically with all the previous videos I've done about CBDCs using, say, like the series of BIS discussion papers, right, that they posted in 2020 and 2021. And this was from a collaboration of central banks from all over the world, right, of major developed countries like the Switzerland, England, Canada, the United States, so on, right? That sort of thing. I believe Sweden was in there as well. But regardless, basically every single argument that they gave for one, he goes through here one by one and just kind of tears it apart, for lack of a better word. And so, or I guess phrase. But anyways, we're just going to go ahead and start because I thoroughly enjoyed reading it. But so there are also calls for the Federal Reserve to get in the game and issue a CBDC that the general public could use. So Chair Powell recently announced that the Federal Reserve will publish a discussion paper on the benefits and costs of creating a CBDC. And I think he's talking about the money and payments one that they did. And I've already done videos going over that one as well. So those will be in the very beginning of the playlist of the CBDCs, right? So the CBDC playlist on the channel, that paper's in there and that sort of thing. It's titled Money and Payments and then something about CBDCs. I don't remember the kind of end of the title off the top of my head. But this topic is of special interest to Waller, since he worked on monetary theory for the last 20 years and researched and written about alternative forms of money for the last 7. And he gave a citation for an example of one of his papers, basically like having a private-based fiat currency that's backed by, I think he said like a stock market index, but like that kind of thing. And I thought it was kind of interesting that I never would have thought of that. But I might read the paper, maybe, haven't decided yet. So we'll see that in a bit, possibly. But that's also in the bottom too. So there's citations for everything. That's what I like about the academic type work in that respect. It's easy to get citations and go to sources and such. But to continue, but at this early juncture in the Federal Reserve in the Fed's discussion, I think, I being Waller in this case, the first order of business is to ask whether there is compelling need for the Fed to create such a currency, and he is highly skeptical. So he asks these questions, kind of what problem does the CBDC solve? Alternatively, what market failure or inefficiency demands this specific intervention? After careful consideration, he is not convinced as of yet that a CBDC would solve any existing problem that is not being addressed more promptly and efficiently by other initiatives, right? And so basically, what he's going to do in this speech is focus on account-based forms of a CBDC, not necessarily like a kind of a general purpose, or not general purpose, because there's different types, right? So you can think of it as like kind of a cash-like token, so to speak, but he's looking at it more from like an account-based, where you're focused on like individuals having an account at the Fed and not necessarily kind of more like a token, so to speak. So that's the kind of that he's looking for, or the kind he's kind of going into, right? And then again, this involves an important distinction between central bank and commercial bank money, because a lot of people don't make that distinction, and that's a topic that I've gone pretty far in depth with in the previous CBDC videos. So I'll kind of reference those for the most part for that discussion. Basically, the differences between a commercial bank's liability and a central bank's liability and how that kind of goes, right? So we're going to skip that part because that's been talked about multiple times in the past. So to continue, basically he talks about reserve accounts. So these accounts provide a risk-free settlement asset for trillions of dollars of daily interbank payments. Importantly, the use of central bank money to settle interbank payments promotes financial stability because it eliminates credit and liquidity risk and systematically important payments system. So basically, using bank reserves for interbank settlement is what he's getting at. That's pretty much it. But where it gets more interesting is how this kind of system works from the central bank through commercial banks to the general public, right? Because we know that the commercial banking system is basically just, they are intermediaries between the central bank and the general population, right? Keeping in mind that, you know, it's a central bank, like it's an actual bank, right? Not just some government type entity. That's not really how the system works, right? And so the funds in commercial bank accounts are digital and can be used to make digital payments to households and businesses, but commercial banks promise to redeem $1 in one's bank account into $1 of US currency. So in short, banks peg the exchange rate between commercial bank money and the US dollar at 1-to-1. Right? And so that's an important distinction, is your deposits in your checking account at a commercial bank are not a liability of the Federal Reserve, right? Not like cash is. Physical cash is a liability of the central bank, right? And so that's where it has to come from. And so basically what's happening is the commercial banks, your deposits are their liability. It's a digital deposit. What do they call it? I don't know, depository liability, whatever you want to call it, right? And so basically when you try to pull out cash at a bank, that's what's happening, is the bank is pegging their deposit liabilities and promising to give you a 1-to-1 exchange rate between their deposit liability and US currency, which is a liability of the central bank. And that's how that kind of works, right? So due to substantial regulatory and supervisory oversight, the Federal Deposit Insurance households and firms reasonably view this fixed exchange rate as perfectly credible, right? So basically that exchange rate is deemed credible because you never really think about it. And that's one thing that really kind of came to mind when I read this, was I never really thought about it that way. And so to actually see it as more of like an exchange rate between different types of, we'll say quote unquote money, because there is a distinction between money and currency, but we're not going to get into that in this video, right? And so the credibility of this fixed exchange rate between commercial and central bank money is what allows our payment system to be stable and efficient. So this I cannot talk this morning, but this division of functions between the Federal Reserve and commercial banks reflects an economic truth that markets operate efficiently when private sector firms compete to provide the highest quality products to consumers and businesses at the lowest possible cost. And this is something he's going to basically come back to multiple times when he's picking apart the CBDC argument, right? And so in general, the government should compete with the private sector only to address market failures. And that's pretty much the only time he thinks about government and intervention in that respect, right? Is if there's some failure in the market, then the government can intervene. And he doesn't think that CBDCs should be an example of that. So some questions getting more into specifically with CBDCs. So could it be that physical currency will disappear? Basically one of the things why the Fed should or could implement a CBDC. And so as he's mentioned before, the key to having credible commercial bank money is the promise that the banks will convert $1 of digital bank money from the commercial banks into $1 of US physical currency. So, but how can banks deliver on their promise if US currency disappears? And so basically, by going cashless, does that basically disintermediate the commercial banks in general and essentially make them useless, right? Because they don't, since they're no longer there to convert stuff. And so how does, if you get rid of that conversion from commercial bank to commercial bank liabilities into cash, right? There's no point for them really in general. You could argue for loans and stuff, but it's like at that point in that system, is that really applicable if you can just have the Fed or some government entity do that, which I guess maybe you could argue that would reduce or get rid of maybe the securitization of other things like mortgage loans into MBSs that get flipped to like Fannie and Freddie and that sort of thing. But that's kind of just a thought that came to mind right now, and I'm not going to go down that rabbit hole, so to speak. So our existing interbank payment services have nationwide reach, meaning that an account holder at one commercial bank can make a payment to an account holder at any other U.S. bank. And then kind of the same thing applies to international payments as well. Where he's going with this is basically having the whole cross-border payments, and basically would implementing a CBDC increase the reach of the U.S. payment system? And his argument is no, right? And so let's see if I can get the exact quote. So the second "so" is actually part of the quote. A lack of connectedness and geographic breadth in the U.S. payment system is not a good reason to introduce a CBDC, to quote him explicitly, right? And so could it be that existing payment services are too slow, right? And then basically this is being negated by FedNow, which will be rolling out, and I've done a few videos on FedNow, which rolls out in mid 2023 next year. I believe they're saying in between May and July. But also the private sector has done something similar with their RTP service, which is real-time payment service. I'm not 100% sure on exactly kind of the plumbing on how that works specifically, but it has popped up a few times in some of the things that I've read. And so he says these services will move funds between account holders at U.S. commercial banks immediately after a payment is initiated. So while cross-border payments are typically less efficient than domestic payments, efforts are underway to improve cross-border payments as well. And these innovations are all moving forward in the absence of a CBDC, right? Basically that they aren't needed, right? Or a CBDC is not needed for that kind of efficiency to be remedied, right? That basically the traditional payment system is doing it anyway, and having kind of a parallel CBDC besides maybe having a redundant system doesn't really add anything, so to speak, from this argument, right? And so the next kind of topic is financial inclusion, which if you remember from the collaboration of central banks and the series of discussion papers, I believe an entire paper was specifically for financial inclusion. So he actually gives some stats that are pretty helpful to put it in perspective. So, quoting, according to a recent Federal Deposit Insurance Corporation survey, approximately 5.4% of U.S. households were unbanked in 2019. So the FDIC survey also found that approximately 75% of this unbanked population, so of the 5.4%, were quote unquote not at all interested or not very interested in having a bank account. And that's an argument that I brought up when this whole thing popped up for financial inclusion in the series of discussion papers by the BAS anyway, was if people aren't, at this point in time, like with how relatively easy it is to get a bank account, I didn't suspect it to be a large population, so now there's an actual number for it, 5.4% of US households. But regardless, if they can't just go in and get a bank account anyway, in kind of the current system, it didn't seem like a significant percentage would be that it would be beneficial to do that, to go to that extent for that small of a population, which is essentially what he's saying here. And so he says if the same percentage of the unbanked population were not interested in basically a Fed coin or a Federal Reserve CBDC account, this means that a little more than 1% of US households are both unbanked and potentially interested in a Federal Reserve CBDC account. And so it is implausible to him that developing a CBDC is the simplest, least costly way to reach this 1% of households, right? Basically, is there not just some other form of initiative or something they could do? And he cites, the Cities for Financial Empowerment Bank On project, which This is the first time I've heard of it, so I'm not going to go too far in depth in it anyway, but just bringing that up, that's apparently a thing if you want to go look into that yourself, if that's something that's important to you. And so the next kind of topic he talks about is basically, is the CBDC needed to basically make existing payment services cheaper? Are they unreasonably expensive, so to speak? And so he says, in economics, the price of a service is typically composed of two parts: the marginal cost of providing the service and a markup that reflects the market power of the seller, right? So the marginal cost of processing a payment depends on the nature of the payment, for example, paper check versus electronic transfer, and the technology used, for example, batch payments versus real-time payments, and the other services provided in processing the payment, like risk and fraud and that sort of thing. So since these factors are primarily technological, and there is no reason to think that the Federal Reserve can develop cheaper technology than private firms, it seems unlikely that the Federal Reserve would be able to process CBDC payments at a materially lower marginal cost than existing private sector services. I just think it's funny that this was a year before a lot of these papers came out, or a lot of the, where am I going with this? So one of the major arguments in those papers was basically that a potential system would have to be multi-tiered, right? To where you have basically the Federal Reserve, in our case, or the central bank in the more generalized case, would more or less be kind of they would take care of the instrument, and then in order not to disintermediate the banks, they would essentially have them provide the service aspect of it because they are better at it, for lack of a better term. Like the Federal Reserve, to my knowledge, doesn't have a robust customer service department, at least not for the general public or on that scale, right? And so that's something they actually explicitly state in their discussion papers, which is why I bring it up. And so not only is this something that, Waller, seeming to be somewhat of a dissident opinion within, I don't know if I'd say dissident, to be honest, because I think the only ones who have come out and really hammered the whole CBDC topic in terms of the Fed governors are him and then Leo Brainerd, who provides the obvious opposite side of things. Separate topic. We're going to come back to that in future videos, and I believe I already have some on there already. So anyways, but this is something I've talked about before. Basically, the private sector is a lot better at doing this to begin with anyway. So introducing a CBDC would create additional competition in the market for payment services, right? So kind of turning more into the whole competition side of things. Because remember, he said the two factors for the cost of a service are, one, kind of the cost for providing the service itself, the process and that sort of thing. And then, let's see if I can get the exact thing. So then the other one is the markup that reflects the market power of the seller, which directly relates to competition, right? So the less competition, the more they can mark up because you can't go anywhere else. The whole kind of supply demand thing, this is something we've pretty much all heard of with respect to monopolies and that sort of thing. So as he goes into say, how would a Federal Reserve CBDC kind of reflect, or we'll say affect this competition in this kind of payment system, right? And so basically, he says, because the general public could use CBDC accounts to make payments directly through the Federal Reserve, that is, a CBDC would allow the general public to bypass the commercial banking system. Deposits would flow from commercial banks into the Fed CBDC accounts, which will put pressure on banks to lower their fees or raise the interest rates paid on deposit to prevent additional deposit outflows, right? So basically it sounds great for the consumer, right? You may get more interest basically as an incentive for holding your deposits at a bank, something that we haven't really seen in quite some time. To put it in perspective, in my lifetime for the most part, or at least I'll say my financial lifetime, because when you're a little kid, you don't really have anything financial you worry about or deal with. But ever since I've had a bank account and anything financial period in my life, it's interest rates on bank accounts and savings accounts have been minuscule, right? They just don't need your deposits. However, and this is where it gets a little separate, or he goes his own way, right? So it seems to him, however, that private sector innovations might reduce the markup charged by banks more effectively than a CBDC would. So basically, private sector competition would be better for the consumer overall than the Fed coming in and being a competitor, right? So if commercial banks are earning rents on their market power, reflecting their competition or level of competition, so then there is a profit opportunity for non-banks to enter the payments business and provide the general public with cheaper payment services. And indeed, we are currently seeing a surge of non-banks getting into payments. And he cites like stablecoins for the most part. And then, so he used that whole thing with stablecoins and basically how, especially the ones that are pegged 1-to-1 with the dollar, and that's really what he's talking about. He's not talking about the more privately kind of not backed by, as he says, safe and liquid pool of assets, right? So if one or more stablecoin arrangements can develop a significant user base, they could become a major challenger to banks for processing payments. So importantly, payments using such stablecoins might be free in the sense that there would not be a fee required to initiate or receive payment. So accordingly, one could easily imagine that competition from stablecoins could pressure banks to reduce their markup for payment services. Another kind of form of negating the use of a CBDC, or at least the benefits, we'll say proposed benefits of such a CBDC, right? And so, to say explicitly, he says, my point, however, is that the private sector is already developing payment alternatives to compete with the banking system. Hence, it seems unnecessary for the Fed to create a CBDC to drive down these payment rents, right? And so basically, the private sector is already doing stuff like this anyway. And so to the contrary, it seems to him that the private sector innovation is occurring quite rapidly, in fact, faster than regulators can process. So spurring innovation is not a compelling reason to introduce a CBDC as well. That's another reason where he's going into it, right? So the next kind of part, and I guess section, whatever, is basically the whole privacy aspect of it. And so basically the traditional banking system or whatever already has these kind of individual privacy kind of uses, I guess, already. And so basically the introduction of a CBDC would negate those and reduce privacy, is his argument, right? So basically he says the government has sought to balance the individual's right to privacy with the need to prevent illicit financial transactions such as money laundering. So the balance between individual privacy and basically preventing money laundering, right? Something they always talk about. So as an example, he says that while the government does not receive all transaction data regarding account holders at commercial banks, the Bank Secrecy Act requires that commercial banks report suspicious activity to the government. So basically at that point, it's basically just up to your bank, it seems. And I haven't read the Bank Secrecy Act, so I'm not going to have much comment on that to begin with anyway. So to continue, depending on its design, CBDC accounts could give the Federal Reserve access to a vast amount of information regarding the financial transactions and trading patterns of CBDC account holders. So the introduction of a CBDC in China, for example, likely will allow the Chinese government to more closely monitor the economic activity of its citizens. Should the Federal Reserve create a CBDC for the same reason? He, for one, does not think so, right? So basically the government gets to see everything that you do. And from there, he kind of parlays into the concept of basically with these foreign governments having they have their own CBDCs. How is that going to affect, the dollar as a global reserve currency? And he doesn't really see how that would affect it, right? Especially with the privacy aspect of it. He's like, why would foreign countries or businesses or whatever use, like as an example, the Chinese CBDC when the Chinese government can see their stuff as well? And he says that's not really an incentive for them to do things with that currency or transfer and start using that as kind of a mode of payments anyway. So to look at it more domestically, he says additionally he fails to see how allowing U.S. households to pay their electric bills via a Fed coin, more or less, instead of a commercial bank account would help to maintain global dollar supremacy. He says, of course, the Federal Reserve CBDC accounts that are available to persons outside the United States might promote the use of the dollar, but global availability of this Fed coin would also raise acute problems related to money laundering and that sort of things. So actually having like a cost benefit analysis of how much would this help versus hurt, and looking at, okay, yes, it might have more, or is basically the amount of use of the dollar that would increase from providing such a service be worth the prospect of increasing the amount of money laundering and so on. I'm not really going to go too far deep into that. So, to kind of get more onto the, let's see, I don't want to, just to quote him explicitly to get it out there before my brain just kind of blanks out. But many commentators have suggested that new private monies will diminish the impact of the Federal Reserve's policy actions, since they will act as competing monetary systems. So it is well established that international economics that any country that pegs its exchange rate to the US dollar surrenders its domestic monetary policy to the US and imports US monetary policy, because they're essentially just a derivative, or like their currency is just like a multiple of the US dollar at that point, whatever it happens to be, if it's pegged to it. So he says basically the same logic applies to private money as well, to where basically if you have a private stablecoin that is pegged to the US dollar for whatever fixed exchange rate, that you're essentially having the same thing happen for the stablecoin as a foreign currency would be as well. So it doesn't really make much of a difference. And yeah, he says that basically to have such a thing, especially with private stablecoins, it actually broadened the reach of U.S. monetary policy rather than diminish it. And then he kind of just comes in to say that all in all, he thinks a central bank digital currency is a solution that's searching for a problem to fix in general. And that's pretty much it. So, trying to think. His kind of concluding remarks, I guess we'll just end there. And so one could also argue that the Federal Reserve should provide a digital option as an alternative to the commercial banking system. The argument is that the government should not force its citizens to use the commercial banking system, but should instead allow access to the central bank as a public service available to all. So as he's noted earlier in the speech, and I talked about a bit before, however, the current congressionally mandated division of functions between the Federal Reserve and the commercial banks reflects an understanding that, in general, the government should compete with the private sector only to address market failures. It's kind of his major selling point, is they should not do anything and should not be allowed to do anything unless there is a market failure of some sort, to where they are, I'm going to say, deemed to be needed. Because I think that's an arguable point in and of itself, but just kind of following along with his argument, it seems that would be, I'd assume, his reasoning for that. That basically with such a market failure, you would have the need for the Fed to step in. Kind of a Fed put, something that's kind of within recent memory, well, I'll say. And so, as I completely lose my spot, so he says that this whole principle is the bedrock that has stood America in good stead since its founding, and he doesn't think CBDCs are the case for making an exception to such a rule or such a fundamental principle. So that's basically it for his closing remarks. So he basically has some form of rebuttal for pretty much every selling point, I'll say, for a CBDC that we've pretty much gone over, period. So with that being said, if you guys, I'd love to discuss this more in like the comment section and that sort of thing, because that's kind of the whole point of this, is, and why I was kind of excited, if you couldn't tell, about finding this speech specifically, because basically every other CBDC related paper or whatever I found has been pretty much for it, or if it was attacking it or criticizing the concept of a CBDC in general, it was basically only for the privacy aspect of it. And I felt like for the other selling points for CBDC, a contrary argument was lacking. at least from what I've found, especially coming from a board or a Fed governor, right? And so basically having someone who is in there having a dissenting opinion, and I thought that was pretty lacking until I found this. So at least I found one. Hopefully this kind of somehow falls into me finding others, because that would be very helpful. I see a few other blog posts and such that he quotes in the citations. And again, I love how this one has 19 citations, and normally these speeches don't have that many. So that being said, obviously this video has lasted a bit longer than I anticipated. It wasn't supposed to be 30 minutes, but yeah. So please feel free to discuss each point in the comments below. If you'd like me to break it down piece by piece in terms of like each individual question, I might do it anyway. But anyways, to kind of have a kind of pros versus cons and kind of battle of the arguments in a way, actually have a little bit of an internal debate, so to speak, and try to articulate both sides of each point to kind of gain a better understanding of it in general. So if you guys are interested in that, please feel free to either further that debate in the comments or just ask for it, I guess. But anyways, I'm going to leave this one here since it's already run pretty long. So feel free to check out like the CBDC playlist if I haven't, because I know I did skip a few kind of major concepts in a way, kind of assuming, for the concepts that I skipped, it's because there are more than a few videos that go over that to some extent and to various extents in the playlist itself, which is why I keep referencing that. But anyways, I'm going to leave this one here finally. So I hope you guys have a good night, and I will see you on the next one.